Is it time for the big and final Bitcoin dip? Could Cardano reach over $7 in the next bull run? And is Ethereum about to crash hard? Let's find out in this week's crypto news video. So welcome back again. I'm Theo, a content creator for the Alt Crypto Talk team. Remember, nothing in this video is financial advice, purely my own opinion and based on my own research. Do not invest in anything you can't afford to lose. And be sure to smash that like and subscribe button. Leave a comment if you have any questions whatsoever. And be sure to follow us on Twitter at AltCryptoGents for daily crypto content. And check out our website for frequent guides, project reviews, articles, and everything crypto related. Okay guys, let's jump straight into the video. So guys, let's start off with the first article, and this is going to be that Tether has just frozen 41 crypto wallets. And for those of you who don't know, Tether is the company that owns the stablecoin USDT. Stablecoin issuer startup Tether froze 41 wallets earlier today, with on-chain data showing several of the crypto wallets use the services of Tornado Cash. Tether made the move to halt operations of the wallets with the help of data collected from blockchain intelligence company Chain Argos. Ether crypto transactions data tracker Etherscan flagged one of the addresses, stating it was reportedly involved in the infamous Ronin bridge hack. Collectively, the frozen virtual wallets moved most funds in staked USDT. Nonetheless, it is not the first time Tether froze wallets linked to warfare, as it seized the operations of 32 crypto money holders related to the wars in Ukraine and Israel. As reported by CNBC, the wallets held a collective sum of 873k. In October, Tether stated it had collaborated with 31 agencies in 19 different global jurisdictions, facilitating the freezing of approximately $835 million in assets related to illicit activities. Additionally, Tether compiled with a lawful request by law enforcement to freeze USDT worth $46 million, reportedly belonging to the beleaguered crypto exchange FTX back in November 2022. The stablecoin issuer came to a consensus on December 1st, 2023 to launch a wallet freezing policy in addition to their existing security measures. And you can see that here, Tether introduces new policy to strengthen ecosystem security, which is fantastic. Tether stated the new policy will prevent sanctioned individuals and organizations present in OFAC's SDN list. The startup said the policy showcases its drive to collaborate with global financial regulators and law enforcement. Furthermore, Tether seeks to offer customers using its secondary market sanction controls it used to oversee the activities of wallets present on their platform. This strategic decision aligns with our unwavering commitment to maintaining the highest standards of safety for our global ecosystem and expanding our close working relationship with global law enforcement and regulators. Paolo Ardiano, CEO of Tether. Using the policy, Tether has reportedly frozen wallets that have been added to the SDN list. The US Treasury has been using the list to crack down on crypto wallets, making transactions related to illegal activities. Now, why don't we move on to the next article, which might be more relatable to you? Some crypto market experts are predicting that Cardano ADA will reach a $7 price point and above. When will that happen? Let's find out. ADA had one of the biggest price gains of the year, up by 137% from its price point of 24 cents at the beginning of the year. Various price predictions have come in on ADA's future price trajectory as investors begin to wonder if the altcoin can continue to lead market gains. Chanjali's long-term forecasts indicate that the value of ADA may continue to rise steadily, finally surpassing its all-time high in the years to come and reaching over $7 by the end of the decade, which would be 2023. Cardano has had 17 green days in the past 30 days. At the time of writing, the altcoin is trading at 58 cents, down 81.19% from its all-time high of $3.09 in September 2021 when the last bull run was. However, crypto exchange Chanjali's prediction indicates that it is poised to change soon, with technical indicators now indicating an 82% bullish market sentiment. According to the prediction, the bullish sentiment could as well push ADA to 62 cents by the end of the year. The bullish outlook of the crypto exchange well exceeds the scope of the current year's forecast, approaching a slow but steady prediction basis. Chanjali's predicted that ADA could break the $1 mark again by December 2025 and break its current all-time high of $3.09 by October 2028. That's very specific. Assuming the trend of price appreciation continues, ADA might end the decade around the $7 price point. This represents a staggering 1100% increase from its current price. If this happens, this would mean Cardano's total market cap would grow well over $300 billion. Additionally, Chanjali's projects ADA reaching an average price of $13.23 by December 2032. That is insane. That is just 8 years away basically, and you could make yourself very rich just by investing. Now, I'm not saying to invest, that is not financial advice. How feasible is this price point? $7 may look like a lofty price point for ADA in this decade, but several factors point to this happening, especially if development and adoption continue at the current pace of the last quarter in 2023. CoinMarketCap's Fear and Greed Index now points to an extreme greed of 80, indicating that the entire market is set for a strong bullish run in 2024. Love that. According to a crypto analyst, Cardano ADA is on the verge of a bullish weekly cross for the first time since June 2020. The last time this happened, the crypto went up on a 6,000% run over the next 66 weeks. A repeat could see Cardano reach $35 from its current price. There is some big things happening for Cardano. If you're a token holder, fantastic, because you could have some serious opportunities right now. However, take this with a pinch of salt, guys. This could be their own agenda. However, let's move on to the next article, which Ripple plunges alongside altcoins in market-wide crash. Galaxy CEO admits XRP army is real. So, what is going on with XRP over the last week? Let's find out in this article. The SEC versus Ripple lawsuit is making headlines again as pro-XRP attorney John Deaton criticizes former SEC Chair Jay Clayton for his comments on the court ruling. Clayton believes that the initial issuance of XRP tokens as a security transaction in the capital raising phase. This is where attorney Deaton disagrees with Clayton. XRP price declined in the past 24 hours as cryptocurrency suffered a market-wide correction in response to Bitcoin's price drop, which we'll be going through very shortly. The SEC versus Ripple lawsuit raised questions about the programmatic sales of XRP tokens by Ripple executives, while XRP holders and legal expert John Deaton believe that the token sale by Ripple XRP executives did not constitute securities transactions. Former SEC Chair Clayton argues otherwise. Michael Novogratz, CEO of Galaxy Digital, told Real Vision's Raoul Paul that he acknowledges that the XRP army and believes they are real. Attorney Deaton supported Novogratz's comments and acknowledged the role of the XRP army in Ripple's partial victory. No one could argue Novogratz is wrong about the XRP army being real. There were 2,000 exhibits entered as evidence in the Ripple case. In her decision, Judge Torres cited only a couple dozen of those exhibits. XRP holder affidavits made the cut. The XRP army's affidavits submitted by XRP holders played an instrumental role in Judge Torres' decision, a partial victory for the cross-border remittance firm. Let's take a look at the technical analysis provided by some of these experts. XRP price declined from 69 cents on December 9th to 60 cents early on Monday as Bitcoin crashed and altcoins suffered a market-wide correction. XRP price recently hit a local top of 75 cents on November 13. Since then, the altcoin suffered a 20% drop. XRP price is likely to attempt a recovery to 68 cents, the 50% Fibonacci level of the decline, from the July 13th top of 94 cents to the August 17th low of 42 cents. The altcoin is trading above its 200-day exponential moving average, also known as an EMA, at 55 cents, and XRP price is likely to attempt a recovery in response to bullish development in the SEC versus Ripple lawsuit. And you can see that on this chart provided here. At the time of writing, XRP is priced at 62 cents on Binance. The altcoin's price dropped nearly 6% in the past 24 hours. Supposedly, we're going to have a small bullish run for XRP. How high that will take us is yet to be discovered. However, I honestly think we're about to have a big dip in the market, guys. That's just my personal opinion. However, we'll get more into that shortly. But let's move on to the next article. And this is for the biggest altcoin on the market, guys. The leading one, Ethereum, which could experience a serious price dip because of the whales. Now, Ethereum faces possible sell pressure, one crypto analyst says, citing how it surpassed the $2,300 mark. Whales have been actively taking profit, and this could trigger a massive sell pressure on the world's second largest crypto, like I just said. The price of Ethereum has been positively impacted by the recent bullish momentum in the global crypto markets, fueled by Bitcoin's surge above the 43k price region. ETH maintains a distinctive market position attributed to its extensive developer community, widespread adoption, and pivotal role in decentralized finance and various blockchain applications. Despite the current positive momentum, there are apprehensions regarding the potential influence of selling pressure from whales on the cryptocurrency's price. According to a crypto analyst, Ali Martinez, whales immediately took profits after Ethereum hit $2,300. The impact of significant holders selling could potentially drive down the price of ETH in the coming weeks. In a bearish scenario, the cryptocurrency might retest the $1,555 support level, and sustained selling pressure could push ETH as low as $1,460 within the next 2 months, the analysts predict. Now, guys, that would be an incredible drop. That's around $800 to $900 drop, roughly, give or take. And guys, to me, that is exactly what I want. I want another buying opportunity, one with a serious price dip so I can get some nice amount of tokens. Obviously, everyone might not want this, but guys, this is a risky time to be buying when it is all greedy. Obviously, you buy in the fear when everything is red, and that is exactly what I want to do. Despite these concerns, the overall market sentiment remains cautiously optimistic, leaving room for potential further growth in the cryptocurrency's price, and that is what I'm kind of afraid of. of, because if it's not going to dip and I'm not going to be able to buy, then obviously it's just going to go up from here and I'll just have to wait, and or even just dollar cost average small amounts up. That is not the best method. However, let's hope it does drop in my case anyway. As we can see here, as Ethereum surpassed $2,300, ETH wells began to book profits. This surge in selling price might soon start to impact the ETH price, as we can see on this tweet. And you can see that here, as we zoom in, at Ali_charts, just to mention his username. Scrolling down, although Ether's market cap of 282 billion lags behind Bitcoin's $857 billion market cap, both networks generate comparable protocol revenues. In the last 7 days, the Bitcoin network accrued $61 million in fees, while Ethereum accumulated $61.5 million. In addition to institutional interest, the price surge is fueled by expectations of an ETF approval from the SEC. Despite the optimistic momentum, there are apprehensions that the upswing in selling pressure might have repercussions on the ETH price in the coming days. Ethereum surging network fees. The rise in Ethereum's network fees is intricately tied to the expansion of its DeFi ecosystem and the widespread adoption of NFTs. Increased DeFi and NFT activities have driven up network fees, with more individuals engaging in intricate transactions, leading to prolonged periods of elevated fees. The creation, transfer, and trading of NFTs involves smart contract executions that consumes gas, and the associated costs that can fluctuate based on network congestion and gas prices. While Ethereum's high gas fees pose challenges for NFT creators and collectors, emerging solutions like Layer 2 scaling and gas optimization provide optimism for a more cost-effective and accessible NFT ecosystem. The surge in DeFi and NFT activity on the Ethereum network since 2020 has resulted in extensive transaction activity, contributing to the persistently high gas fees. Currently, the average gas fee for minting an NFT on Ethereum is around $100, subject to variations based on network congestion, gas prices, and smart contract complexity. At the time of writing, Ethereum is trading at $2,348 according to data from CoinGecko. So I'd love to see where Ethereum goes from here, guys. Like I said, I want it to dip to that sort of price of $1,500–$1,600. That would be a great discount for us all. It gives us all a huge opportunity to buy in one more time. Guys, this next bull run could be absolutely massive, and it's very important to me that I get another dip, but that is just me being selfish anyway. So let's move on to the next article, which is the final one, and that is the Bitcoin price crash liquidates $310 million of positions ahead of US CPI and interest rate decision. Guys, this could be the catastrophic drop that we've all been waiting for. Let's find out what's going to happen. So Bitcoin price dropped 7.74% in the early Asian session, briefly tagging the $40,000 level, according to data from CoinGlass. This move caused nearly $200 million worth of positions to be liquidated. With the US consumer price index and Fed interest rates decision set to take place this week, volatility is likely going to remain high. So be careful, ladies and gentlemen, listen closely, and let's carry on. Bitcoin whiplash catches greedy bulls. No pun intended. Bitcoin price briefly touched the $40,400 mark after shedding nearly 7.74%. The fresh start to the week was met with massive selling from Asian traders, which caused nearly $197 million in longs and $8.23 million in short to be liquidated. This drop also wiped $1.2 billion in open interest, which currently sits at $17.5 billion. But what does this mean for Bitcoin? Bitcoin price currently trades around $42,000, which is the midpoint of the 77% crash Bitcoin witnessed during the bear market crash. This mean level is pivotal and is bound to trigger massive take profits or sell orders that cause market-wide liquidations. Bitcoin might consolidate here as the struggle between the bulls and bears intensifies. Comparing the price action of the last two cycles, there is no threat of a major bull market correction for Bitcoin price until it tags the 62% retracement level of $48,733. However, investors need to be cautious of today's moves, which might catch many greedy investors off guard. The ideal place for market-wide profit taking to occur will be the $50,000 psychological level. Now, you can see that all on this chart, as we can see here. And personally, guys, like I've said a few times in this video, I definitely believe there is going to be a dip. In fact, a lot of people out in the crypto world are saying there is going to be a dip, so that should give you extra caution just to tread carefully. I don't want anyone to lose money from this, guys. This could be the biggest bull trap the market has ever seen, so be very, very careful. Dollar cost average if you are buying, buy small amounts if you really want to. Start taking profits if you're making good amounts, and guys, get ready for that next dip. You could create bigger opportunities by selling now, or just by buying later when the dip comes, instead of buying it all when it's up 150%, 50%, 30%, 40%, and so on. So guys, That's basically it for all the articles. However, at the moment, in the last 24 hours, we've seen over $69 billion in volume. That could be all the crashing and the liquidations happening, obviously, and a lot of people panicking. The overall crypto market cap is down 4.23%, which is a shame because we were getting closer to $2 trillion. We could be getting there still, guys, but that looks unlikely as we are about to head into a big dip, in my opinion. The Bitcoin dominance is at 52.4%, while Ethereum is at 17.2%. Ethereum Gwei is at 26, which isn't too bad, however, still quite expensive, and I would recommend waiting until it hits about 10 to 15 Gwei, depending on your budget of spending on gas fees. Also, guys, the Bitcoin halving is happening in 138 days, which is practically around the corner, just 4.5 months away, and we will be there, and then the big major bull run could be in our line of sight. And also, guys, the Fear and Greed Index is sitting at 80, which is extreme greed. However, that could change at any moment, so be very cautious, like I've said in this video. Guys, that's pretty much it. I hope you enjoyed this video. If you did, please don't forget to hit that like and subscribe button. Leave a comment if you have any questions whatsoever. And we currently have a promotion running on Bybit, the best centralized exchange platform for buying, trading, and earning. Bybit is home to all your favorite cryptocurrencies, and you can claim up to $4,380 just by signing up using the link in the description below. It's simple. If you need help finding the right crypto gems, then follow us on Twitter at altcryptogems and head over to our website to get your hands on detailed project reviews, crypto guides, and more. Thank you very much for watching, and we hope you found this video helpful and informative. Until next time, DGens.